would say that they certainly, to the extent that American returns have been higher than those around the world, at least in developed countries, I would say that they are not solely due at all to accounting shenanigans. I think that the absence of honest accounting for option costs has been a factor, but American business has done very well, excluding any accounting activities that Charlie and I might differ with. I'm no expert on exactly what returns have been around the world in developed countries, but my impression definitely is that American business is well above average for the developed world in terms of profitability, and I don't have the answers as to why that's occurred. I think that American business and I think the whole American system has reflected more of a meritocracy than exists in many countries, and I think that a meritocracy works best. I think that mobility between classes, which is the flip side of a meritocracy, does tend to get the Jack Welches into positions of where they run a General Electric or an Andy Grove or an Intel, or go up with Sam Walton at Walmart. I think if you'd taken those same individuals and dropped them down in most countries, they would have done very well, but I don't think they would have done quite as well as here. And I think that what they have done well has spilled over in a big way to benefit the American economy. So I would not lay it all on the accounting shenanigans. And the pension funds accounting, that applies very heavily at some companies. And of course, most newer companies don't have pensions. Companies that have started in the last 20 or 30 years are much more inclined to have various kinds of profit sharing or 401ks. The older industries that took on pensions, spurred to a great degree, I think, by World War II, when you got excess profits taxes that ran to 90%, and there was a huge incentive to start pension plans and fund them heavily, because the government, in effect, was funding 90% of your pension obligation. So there was a great boom period in the inauguration of pension funds, and of course that meant steel and auto and all of those big industries of that time. Charlie?
Yeah, it isn't so much accounting shenanigans as it is deliberate financial practice. Take General Electric. There's been a deliberate increase in financial leverage, which was made possible by the wonderful and deserved reputation. There's been a deliberate increase in repurchase of stock, which General Electric has done even when they're paying huge multiples of book value. That sort of thing does wonders for returns on equity, as reported, as does the process of writing off everything in sight and various extraordinary charges, removing the burden of past costs from future earnings. You put all those things together, and American returns on equity are higher partly because the management is deliberately set out to paint the company as unusually efficient in its use of capital, meaning that it earns a high return on shareholders' equity. Think of how high we could drive our return on equity at Berkshire. I mean, we could make it almost any number you want if we just used enough leverage.
Yeah, we could run it with no equity.
We could run Berkshire with no equity. Yeah. And then people could say, gosh, these guys have finally learned how to manage the damn thing. It's not been an objective around here to reduce the equity to zero. But at other places, in order to make the reported return on equity good, they deliberately pound down the net worth as much as they can.
Yeah, the questioner may have seen, if you look at the S&P figures of the last 15 years, they report them both before special charges and after special charges, and there's been a very significant difference between those two figures. I mean, the American business likes to frequently write off things and say that doesn't count. And of course that takes the equity down and it actually frequently benefits future earnings because you remove costs that would otherwise hit the income statement in future years.
The truth of the matter is you have part of this is shrewd and correct management of the company's financial structure and operations. And part of it can drift into games.